Valuations are starting to move away from Europe. We're seeing momentum starting to fade quite sharply. If you take a look at what's happening, we've got a great chart floating around about the death cross, like the kind of the 50s going below the 100 and potentially the 200. What's going on here? Is it just the weaker euro? Give me the story.
I mean, it's not necessarily just that. I mean, there are a lot of factors here. And one, when you think about the argument for buying European stocks, is that growth is still picking up. That's sort of the backbone of European stocks. But when we have year-end EPS estimates halving, they're about 50% less than where they were. When you have economic surprise indexes flipping, you don't have that sort of stop of the growth to offset any sort of political headline risk. And one thing that I brought this chart for you that I thought was pretty interesting. So one of the arguments for European stocks is that valuations are lower than the U.S., are lower than Asia. But if you look at where the premium and discounts actually are, it's very concentrated in energy-sensitive sectors in Europe. So what essentially that means is if you are buying Europe saying, OK, I think valuation is going to lift to match the U.S. and Asia, you're actually betting on oil prices. You're expecting oil to get stronger in the energy sector in Europe to do better because that's where the discount is. Tech is more expensive in Europe. Healthcare is more expensive in Europe. So it's a very energy-specific bet if that's the argument you're making.
Investors concerned about the euro, about the price level of the euro. I mean, I thought that the stronger euro was an issue because it hurts exporters.
Sure. So, I mean, one of the things here that I think has been pretty telling is, when you look at a stronger euro, certainly the DAX, a very exporter-heavy index, has issues. But, I mean, one of the interesting things is when we got that Tillerson headline this week, the biggest mover, it seemed, off of that was the DAX. So it's not even just the euro. It's this protectionism talk we're getting out of the U.S. And before, I mean, betting on politics in stocks didn't work quite well. But now, again, like I said, now that engine of growth seems to be waning, political risk is back in the mix.